program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across what we saw overnight. Global equities initially falling ahead of a likely US government shutdown, but then recovered to finish in the green. In a choppy session on Wall Street, the major indices closing higher, marking quarterly and monthly gains. In fact, for the month, the S&P 500 gained 3.5% for its biggest September gain since 2010, while for the quarter it was up 7.8%. The Nasdaq was up more than 5.5% for the month, to be up more than 11%, the best third quarter gain in 5 years. And the Dow was up 1.9% across the month, climbing more than 5% for the quarter. And the last session of the quarter was subdued given the looming government shutdown, with airlines leading declines as the suspension of federal government services likely to affect aircraft movements. Healthcare was the best performing sector, with Pfizer rallying after President Trump said he would cut the price of all prescription drugs in the Medicaid program for low-income Americans. Nike beat expectations for quarterly profit with a rise in revenue as the sportswear giant attempts to rediscover its identity after a string of weak quarters. OpenAI reported around $4.3 billion in revenue in the first half, about 16% more than it generated all of last year, but spent $2.5 billion on research and development costs for developing AI and running ChatGPT. Chipmaker Wolfspeed surged the day after exiting bankruptcy. Firefly Aerospace plummeted following a launchpad failure of its core booster for its Alpha rocket. And in London, BHP shares fell on a report from Bloomberg that China's state-run iron ore buyer has told major steelmakers to temporarily halt purchases of all new BHP shipments. Well, the US government shutdown appears inevitable as Republicans and Democrats fail to reach an agreement that would extend funding past a midnight deadline. Democrats want to modify the must-pass spending bill to extend health benefits for millions of Americans that are due to expire at the end of the year. The Republicans say they must tackle that issue separately. President Trump has warned that allowing the federal government to shut down would allow his administration to take irreversible actions, including shutting down Democrat-initiated programs. Well, the US Labor and Commerce Departments have flagged that the shutdown would mean all data releases, including September's employment report due on Friday, would be suspended. The latest data showed job openings increased marginally in August, while hiring declined, with federal government job openings falling amid spending cuts. And US Treasury yields were mixed, with some investors seeking safe haven assets amid that political uncertainty. The US 10-year yield was at 4.14, the 2-year falling to around 3.59%, and the US dollar index down slightly on the day. The Aussie dollar, which rose after the Reserve Bank decision to leave rates on hold, has climbed back above 66 US cents. Oil prices have fallen on the prospect of a supply surplus due to potential OPEC Plus plans for a larger output hike this month. Brent crude futures down around 1.5% at $67 a barrel. Copper was off close to 1%, iron ore rising around 0.5% to $103 a tonne, and gold hovered near record highs. Buoyed by concerns over US government shutdown, spot gold at around $3,858 an ounce. And Bitcoin is trading close to 114,000 US dollars. Let's get more on what we're seeing with a focus on US markets. John Blank is the Chief Equity Strategist at Zacks Investment Research. He joins us again now. John, welcome back. Good to see you. Let's start with that US government shutdown. We're just, hours away, it would seem. Is that inevitable?
I think so, Andrew. I think so. We spoke before the show about this. Last time we did this was December 2018 through January 2019 of the first Trump administration. A year in front of COVID. It probably almost seems like a lifetime ago when that happened. So at the last time, there was 800,000 people furloughed. This time they say they're going to get rid of people and just X them from the system. And this is, in fact, probably what Russell Vought, the OMB, the director of the budget, wants. So, we're in a stock market that doesn't care about fundamental news, so I'm not sure that's going to care about this. but the rest of us should care about it. And having no functioning federal government for the next few weeks is probably the base case at the very least.
But are you saying perhaps this is part of a grand design by President Trump? It's working in his favour?
Yeah, there's no question. Russell Vought came out of the Heritage Foundation, which is the Project 25 authors. He was brought in, he ran the Heritage Foundations, and he was brought in. The only thing I can say, to the good side is we also found out tonight that E.J. Antoni, his chief economist, was blocked from being at the Bureau of Economic or Bureau of Labor Statistics. So at least we're not going to get, rigged data, at least at this round, from the BLS. But, Russell Vought wants this. This is the Project 2025 blueprint. It's verbatim, the blueprint, and they're going to do it. So, and the market won't care about it, Andrew. That's going to be the most mind-boggling thing is we've already done 4 or 5 months of flat payrolls. There's plenty of evidence tomorrow from the ADP. If we don't get the government jobs, we're going to have another flat payroll, or at least the imputation of a flat payroll. And the market's not going to care because it's an AI boom and nothing matters other than the AI boom.
Well, and that's evident when we looked at that performance, as I just mentioned there, the quarterly performance. Markets keep going up. So you're saying a muted response then in relation to that shutdown. I mean, any sign that perhaps investors are seeking safe haven assets, and dare I say gold, although that's not really acting like a safe haven asset at the moment, is it?
No, Andrew. I mean, everything, it's just a big inflation rally of anything, as far as I can tell. And, I think if you just boil it down to the year-to-date return, 17% for the Nasdaq and 9% for the Dow industrials, you have a 2 beta Nasdaq play. So it's just a high beta, high crypto, momentum trading environment coming out of the Liberation Day lows. And that's it. That's all that's going on. And if we talk to these 3 stocks today, you'll see that it's global now. We've got any AI infrastructure provider, digital provider in Europe, digital provider in Japan, digital provider to message boards in the United States. Doesn't matter. Everything's going up. That's in this game of the AI boom. And the thing that's crazy, like your earlier data pointed out, OpenAI did $4.3 billion in revenue in the first half of 2025. That's the big player. They're $4.3 billion in revenue. So, the bulls are saying that's just how far and fast this is going to go. The other thing is you just got to sit back and realize $4.3 billion in revenue, Andrew, in the United States economy of $30 trillion is nothing.
Well, look at the upside. John, let's go to your stocks, what you're looking at. The first one being Legrand. So what this is, electrical provider, digital building infrastructure and so on?
Yep, this is out of France, and this is digital infrastructure. So this is an AI play in the French context, and the stock has gone. That's the stock. You can see it exploding out of early April and going up now. And you got the ADRs at $23 a share. You got them in Europe at about 130 euros. Again, Andrew, it's a core industrial name in France, but it makes this digital infrastructure. So it's got the bid on it for this high bid AI boom. It's just another example of why we need to stop thinking about this as just a U.S. play. It's really infected the global markets.
All right, so now you're casting your net wide here. You're also looking at a Japanese company, Marubeni Corporation. What are you seeing here?
Yeah, Marubeni Corporation, Andrew, $22 a share in earnings. So it's got a 10 forward P. It's not overvalued. But again, why is it building out? It's a big trading house, diversified conglomerate, but they build energy infrastructure and digital infrastructure. So again, somehow in the Japanese context, I think people are singling out Marubeni as one of these players that's going to benefit from the build out of the AI infrastructure in Japan. So again, it's a global thing, and this is just another example of how fast and how broad this trade has been. So I would just keep in mind, we'd like to focus on the United States. It's certainly the case that the United States is the center of this, but it's gone global now, and it's been global for a number of months.
And finally, Reddit, the social media platform. What are you seeing here?
Andrew, this one IPO'd, last spring of 2024. The IPO is, 16, 17 months old, and you're looking at a $30 a share IPO or something like that. It's $240 a share now. There's 230 here. So what does this tell you? This is the price earnings ratio on this, unlike Marubeni, which is at 10. And the first one, Legrand, is like 26 PE. This one is at 133 price times earnings. So, this is a message board. This is the subreddits. It's got 120 million users or 110 million users daily. And this is just what's going on. We've got a media-generated meme stock boom, and Reddit's the benefactor of that. I think the only interesting thing here is they've got this double your money on Reddit because they're trying to do advertising into the daily active user base. So there is this feeding frenzy that's saying, okay, now that everybody's talking to everybody online in these little subreddits, ginning up all these meme stocks, at least we'll sell them advertising and make some money on these people. So again, it's rapidly creating another scenario where you just got to ask yourself, when does it end? How does it end? And the answer is, to be determined.
Now, John, just to finish off, returning to the equity market you're seeing there, are you expecting this quarter those equities to perform as well, or at least outperform global peers, if you like?
Andrew, I just, when you look at the charts of many of the major indices, and these stocks are all, $40 billion market cap companies, they're all buried in the major indices. They're large cap names. They're just falling up right on a line. So, the momentum trading is so clearly in place. And, people are just so afraid of missing out on what looks like such an easy trade. And so, the machines, for whatever reason, when they don't get inputted, hey, the PE ratio is 133. Or, for example, Tesla. Let's talk Tesla. I looked this morning, and Tesla has a 267 price times earning ratio. 267, and they're raising price targets. So, when do people call time on this? I don't know. But at the end of the day, you're not wise to short this market because the momentum's on, and you're going to be the wrong player on the wrong side of that trade, more often than not. So, Andrew, the game is on here. It's a momentum trading game until it's not. And these fundamental catalysts like shutdowns and poor jobs data don't seem to matter to this group, because they can just wave their hands and say, hey, you know what? The growth of AI is so super normal. It is so extraordinary. It is so structural that it doesn't matter. It doesn't matter what you said.
John, thanks for joining us from Zacks Investment Research. Let's return to the local market just ahead of the open. We are expecting a slightly negative start. Let's take a look there. So currently off around 0.1%. We're going to get right across that in just a minute or so. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.